Hi guys and welcome to Finspire. Today in this video we will talk about how to apply a stop loss and a target if you are trading in options in directional way. Like if you are trading in a bullish direction or a bearish direction, and this is the only way how you should apply the stop loss. There is no other way in the entire structure of the financial market with which you apply a stop loss. So basically your stop loss is applied based upon the position, and this particular concept is part of the Finspire masterclass. So if you are interested to learn and how to trade professionally in the financial markets, and you can register for the Finspire Masterclass. It's a 30-day masterclass, and the link is given in the description. On to the topic, how you should apply the stop loss if you are trading in the financial markets. Now, this is a very important concept of basically stop loss and a target. Now, even if you're talking about the stop loss or the target, the both are applied with the same concept. So let me explain it to you in a very quick way. First and foremost thing, you basically needs two chart. The first chart is basically for option, which is basically your spot chart from where you are actually making your trading setup. The second chart is the option chart, where the option price will vary and you'll have to apply your target and a stop loss on the option chart if you're trading in options. Okay. Trading in basically stocks is very simple. You have a price band and everything, whatever the trade that you're going to take, you apply your target and a stop loss on the same spot chart. But once you start trading in options, you have to apply your target and a stop loss in the options chart, not in the spot chart. In the spot chart, you have to define your trading setup. So for example, in this quick example, we will take an example of Bank Nifty. Bank Nifty is an index and we are going to take a directional trade. Now, when I say that we are going to take a directional trade, we are basically taking a trade in either bullish direction or a bearish direction. Now, the third direction of the trade, which is the sideways direction, we are not taking into account because that is not how the concept of stop loss comes in that. Okay. So it is only bullish direction or bearish direction. You have to apply the stop loss in this way. First and foremost thing, let's take an example of today. Today is 19th. And here, as you can see, were the two important key OI levels and the market was actually sliding down. And in this particular case, we are clear that we have to buy the market on a bearish note, which is basically we have to buy a put option. So basically in market, there are two options. One is call option, put option. If the market is going down, you buy a put option. If the market is going up, you buy a call option. Then you get profit in both the ways. Okay. In this particular case, the market is going down. So we'll basically buy a put option. Now, which strike price to select is basically the key to your stop loss. Now, this is a very important concept. The strike price that you select and the delta of that strike price will define what will be your target and what will be your stop loss. For example, in this particular case, we are selecting a strike price of 44,000. Now, 44,000 at that moment of time when we are taking is at the money strike price. Now, let me explain it to you, the concept of at the money, in the money, and out of the money, which is basically looks like this. So this is an option chain. And here, as you can see here, this part which is yellowish in color is basically in the money. The part which is white in color is out of the money. And the part which is where the color is getting changed right here is basically at the money. So whenever you are taking any option to trade, I'm assuming that at that point of time, that particular option was at the money, which is basically where the currently the spot is in the market. This at the money has a delta of 0.54. If you look closely here, this is the delta on the top of it. This is a paid dashboard, guys. And in the free version on the NSE website, you don't get this information about the deltas and all. This is basically sensible. This is a paid dashboard for trading, for professional trading. Now here, as you can see, this delta is 0.54, which basically means that your stop loss will be defined by 0.5. Okay. Now, whatever the target and whatever the stop loss that you're going to define, it is going to be 0.54. Now, the reason why I'm telling you it currently is because currently market is closed, and since market is closed, 43,700 is your at the money. But when you were taking trade in the morning, this 44,000 strike price, which is basically this strike price, where is the 44,000? Here. 44,000 was your at the money at that point of time, which basically means the delta for that strike price was 0.5. Now here in this case, since we are buying the put option, we have to see the delta on the put side, which is basically negative. So if you are basically trading call option, then your delta is positive. If you are trading on the put side, then your delta is negative. So when you bought this 44,000 put option, this is the option chart of that 44,000 put option. At that point of time, the delta was 0.5, which is basically minus 0.5, but I'm just giving you in a simple explanation, delta was 0.5, which basically means that if you are trading here, everything is going to be 50%. If your target is 100 points, then your target in the option chart will reduce to 50%. In this particular case, let's take an example of the basically trading setup. So let's assume I'm gonna take a trade right here on the start of this candle, morning 9:15. This is the morning 9:15 candle. Market has opened here, and I have taken a trade which is basically a short position. Now I have defined my trade here. This is my short position. Target I'm gonna take for 200 points. Let's take 200 points right here. And the stop loss I'm going to keep is basically the last resistance, which is 100 points. Now, basically, the risk is to reward is 1:2, which is basically means at 100 points of risk, I'm capturing 200 points in my trade. Okay. This is a directional trading setup. Now, we will go to the options chart, which is basically the 44,000 option strike price, which we have selected, because this is the place where we selected the strike price, which was 44,000 was at the money. Okay. Now we will go to 44,000 at the money chart, and here we will select a target and a stop loss. Now, what will be our target and what will be a stop loss? I'm going to explain it to you in a real quick way. Now here, as you can see here, first we will put the target. So target for us was starting to almost 200 points. Now, since we have taken an option of delta 0.5, so a target will now be only 100 points. Okay, because it is 200, a delta is 0.5, which means 50% of 200 will be our target. So I have to take a 100-point target here. So if I go to my option chart, let me just put the target as a long position, because put will go up. If you have bought the put and market is going down, the put will go up. So we are taking a long position right here. Target would be 100 points, which is basically this. We have defined a target of 100 points. If I just do a little bit correction, this is 100-point target. Now, the stop loss here in the spot was of 100 points. Now, stop loss will also get reduced by 50% because our delta is 0.5. So now our stop loss will be 50 points. Here, the stop loss is 100 points in the spot, but once you go into your option chart, your stop loss will be 50 points. So all you have to do is go here and reduce your stop loss to 50 points, which is basically this. This is your 50 points. Now, this is your trading setup in your option chart. And as you can see here in 10:15 at the morning 10:15, your target is achieved. Similarly, in the morning 10:15, your target is achieved. This is how you basically apply a target and a stop loss. If your delta is 0.5, which means basically you have to reduce it by 50%. If your target is 200 points, then you have your target in the option chart would be just 100 points. If your stop loss is 100 points, then your stop loss in your option chart would be just 50 points, which is basically the half of whatever you are trying to capture in your spot chart. If you are capturing 500 points, then your target would be just 250 points. And if your stop loss is 100 points, then your target stop loss target in the option chart would be just 50 points. This is how basically you apply target and a stop loss in your positions. Now, I will give you one more additional concept, which is very interesting in trading. If you are trading with multiple options legs, then basically it becomes very difficult to define what will be the target and what will be the stop loss. Now, for those particular cases, we have such kind of trading dashboards, which is basically dashboard like this. Now, this is a paid dashboard where you actually, whatever you are trading, you will see the delta of your options and delta of different legs in this particular dashboard. For example, in a very simple way, I have taken a call option right here. And if my call option currently has a delta of 0.54, which basically means that this PNL graph, which shows to me over here, will move with a delta of 0.5. If I'm taking any other legs, if I'm adding any other leg to my particular trading setup, let's say I just add a put option and then I add another call option and then I add another call option. Okay. Now, whatever the delta of my option would be, these are all my options. These are multiple options. When you are trading with different legs, this is the place where you should look at the delta. You cannot compare the delta through your options chart, or you cannot go into the options and compare the delta. This is the place at the bottom you will identify what is my position delta. And let me give you one very more important point here, that trading in options is all about delta. If your delta is 0.84 right here, which basically means if the market will move in the positive direction, then only you will make profit of how much? If market moves 100 points, you will make 80 points of profit. This is how basically professionals trade in the market. They know where they are heading, where their trades are heading, and that is why such kind of dashboards are important for you to trade. But if you are just trading directionally, this is the concept which I have explained it to you. If the at the money delta is 0.5, you have to take 50%. If the delta is 0.6, you have to take 60%. Delta is 0.7, then 70%. This is how basically you trade in the financial markets. Let me know in the comment section below if you have any other questions apart from this. And if you need me to answer any other questions, like any doubts on your results, just let me know in the comment section and I'll make a video for you. That's it, guys, in this video, and we'll see you in the next one.